Joining us now is Bloomberg Asia News Desk editor Emma O'Brien from Beijing on this most recent development with the PBOC. Emma, welcome. Take us through what we know.
Well, what we know is that yesterday on Monday here in Beijing, the PBOC met with 14 major banks, both foreign and local. These are the banks that provide information that makes up the daily reference rate, which is the main tool that the PBOC uses to manage the yuan on a daily basis. It met with them and urged them to avoid herd behaviour in the market. What they mean by that, as far as we understand, is often they'll see their clients jumping onto a trade, selling yuan, buying dollars, whatever it may be, and then they'll get in on the act with that too. They're urging them not to do that, to back off from that sort of behaviour. The PBOC really is not a fan of this sort of thing in the market, particularly now with the yuan at pretty dangerously weak levels.
And we have seen a little bit of a reversal here in the yuan, not necessarily on the back of this. We already were seeing some strengthening of the yuan today. So I guess the question is, will that be sustained? What is the feeling in the wake of this?
Well, the fundamentals really haven't changed that much. These are the reasons for why there has been downward pressure on the yuan. The trade war remains very live. It's still a very confusing and live factor for a lot of investors. They don't know what comes next, whether Donald Trump will move on more tariff threats, or whether China will act in other ways to hit back at the US after its threat on $60 billion worth of US imports the other day. Also, we have the hit to the economy. It was already looking to slow before the trade war intensified, but is expected to slow even a little bit more with this factor in play. So people are still expecting more weakness in the yuan, though we may see a little bit of stabilization because of moves like this.